myth of free market U.S. capitalism.
The first lesson is that we recognize that the U.S. economy is not and never has been a true free market economy. In his 1963 book, The Triumph of Conservatism, about the so-called progressive era at the beginning of the 20th century, historian Gabriel Kolko wrote, "The answer is that the federal government was always involved in the economy in various crucial ways, and that laissez-faire never existed." This has been known to historians for decades, and need not be belabored. 3. This fact may be well known, yet it most decidedly needs to be belabored as it is conveniently ignored all too often in public discourse. Whenever any Tom, Dick, or Mary runs for public office, increasingly there are identified economic issues where something is claimed to be amiss with our free market economy. Having erected such a straw man, the inevitable fix proposed by the political wannabes will be more government oversight, regulation, or outright management of the offending businesses. So pervasive is the faith that ours is an imperfect but free market system that it is almost never suggested that the offensive behavior could be the result, intended or not, of government intervention itself in the marketplace. And, in those rare instances when blame is laid on the government's doorstep, the solution offered is to change or increase government involvement rather than to examine it for being the fundamental source of the problem. The continued duplicity, complicity and imperfection of the free market is implicitly assumed as an article of faith. The only mistake those who subscribed to that faith made was that they didn't get the proper amount of government intervention right the first time. Politicians do not get elected on the mea culpa platform. Some may point out that even in the best of all worlds, there is a legitimate role for government to play in the economy. In its simplest form, the government role would be to set the ground rules and be an impartial referee of last resort in the economy, but otherwise let the chips fall where they may. There would seemingly be a role for the government in granting and enforcing copyrights and patents. Then there would be a role in dealing with natural monopolies and the provision of public goods. All of these are generally accepted as proper roles of government in the economy. My argument is not whether these are proper or improper, but rather that the government unmistakably is involved in the economy. That is a fact. Further, it is a fact that the involvement of the government in the economy has consequences that are often far from the intent of the involvement. Even the most traditional roles we have assigned to government are not untainted. For example, many claim that copyright and patent protection is needed to encourage innovation and growth by protecting intellectual property. Actually, the example of copyright and patents provides several interesting lessons to which we will turn later. However, now it is sufficient that we understand that government is not a neutral, benign, staid, and static arbiter in the economic affairs of the nation. Rather, it is an alternative stage where managers must have a presence, whether they like it or not.